Hey guys, this is the second part of the bigger message about contagion, stagflation, and the tornado pattern. So in this video, we're actually going to review a few patterns. Okay, now one of the patterns is a pattern that we have developed here at 13 Market Moves years ago, and we've been able to utilize it successfully, especially when it comes to trading crypto, such as Bitcoin options, Ethereum options, some altcoin options. But specifically, this pattern has been omnipresent in many other sectors of the market. So we're going to glance at that. So for those of you that are interested in understanding precisely what the pattern can do for you and how to spot it on charts, we have a 6-hour course. You can get it at 13mmtv.com, and I promise you, this is how you will land some of the biggest trades in your lifetime. So for those of you that are not familiar with the pattern, I'm just going to give a brief overview. Right here, we're looking at a chart of S&P 500 dating to December 24th, 2018. For those of you that trade the markets, you guys know that all of a sudden we had a huge drop, which, by the way, we accurately predicted right before this shit happened. And how do we do it? It's by following the tornado pattern. So tornado pattern composition and structure, something looks like it's going to the moon forever and ever. Then early signs begin of deterioration. The market is going to try to bounce once, twice, 3 times. Now, notably, this is the most simple classic example of a tornado pattern. Notice the 3rd time something bounces, it doesn't quite come up to the level. It's just a little bit shy of the last attempt of the bounce. So normally, right after this or shortly after this, you'll have a drop of anywhere from 5 to 30%, depending on, other context of what's happening in the market at the moment. So this is a classic example because you can clearly see bounce 1, bounce 2, bounce 3. You can call them waves. Sometimes these tornado patterns will be in 3 or 4 bounces, or in 3 or 4, or in instances there's going to be a situation where you can have even 5 of this. Now that's going to happen very rarely. Now this can come up on various time frames. Right now we're looking at a time frame that's basically covering a time frame from July all the way to December. So this is a pretty lengthy pattern right here, and therefore the longer the pattern is developing, the longer the impact of the pattern on the overall move of whatever you're trading. So as someone that trades the markets based off the patterns, divergences, and some of the context as far as the behavioral patterns and the macro environment, I see these patterns on various time frames. So when I'm looking at trading something, I don't look, what does somebody say about this stock, or how did the earnings go? None of that shit matters. What matters is when you look at a stock, when you look at gold futures, when you look at oil, when you look at something, look at it from the standpoint of a pattern, okay? And so opposed to many people getting bullish every time something pumps, like these were all perfect answers on this. If you guys follow the channel since 2018, you know that we have accurately nailed this pattern, and we've accurately nailed this drop. Now what comes next is probably shocking, because after that we went super bullish on the market while everybody else still was highly bearish on it, and that call ended up being highly accurate as well for almost like following 9 months. But right now I'm going to show you, since the beginning of the year, guys, we have been calling for 1973, 1974 stagflation case for 2024, continuation into 2025. And I'm going to bring up a chart, which is probably going to fucking shock you, but this is how accurate this historic analog really is. So now get ready. We're looking at Dow Jones, October 4th, 1974. Now, this covers a little bit of a longer time frame. So when you're looking at these bounces, it is not as pronounced as the prior chart we're just looking at, but focus on this. So similar conditions, something looks like it just keeps going to the moon until some deterioration happens to the downside. Here's your bounce 1, here's your bounce 2, okay? and here's your bounce 3. Your bounce 3 doesn't quite come to this level. Now, there's going to be instances, right? This is a sure fucking thing here. There's going to be some instances where on your third bounce, it could match this level. It could overshoot this level. Oftentimes, it could indicate another drop and another potential bounce. But ultimately, in a tornado pattern, when you see bounce 1, bounce 2, bounce 3, you want that last bounce to be under the prior bounce. That is a sure fucking thing. Again, I've seen some tornado patterns that we have taken action on where the last bounce is above the prior bounce. Okay, that is not as 100% of a lock as when it doesn't quite get to the prior level. But you can see the pattern is the same. Drop, bounce 1, or wave 1, wave 2. Wave 3 doesn't quite come to the level right here. And what happens next? Boom, there you have it. There's your 1974 historic analog. Now, I'm not a fucking magician, okay? I cannot like make these charts, right? Anybody can pull this shit up. Okay, look at the timing of the last bounce, okay? June, July, okay, August. We are right here in August. We just went for a week of nothing but a fucking bounce. Look, this is a perfect match. We are right fucking here. And this is what's likely to happen. So if you look at these analogs, and guys, keep in mind this historic analog because I'm about to show you some other stuff that is current. And, you know, the pattern is there. It is an identical pattern. So while what you hear in the news is totally different, you know, they're going to tell you how, you know, it was just a growth scare. Everything is fine. And I think within that actually lies an opportunity to someone who's going to look at this historic analog and say, well, shit, if this is where we're at right now, and this is what's about to happen, then why am I only putting 5K in this fucking position? I should be putting 150K in this fucking position. I should be putting, guys, this is, sometimes market just does something stupid and miscalculates what really is happening. We know the market could correct these errors from time to time rather rapidly. But however, look at the current market conditions. The market has been going higher until July for like 458 days. So the type of collapse that we have seen so far does not justify, and it does not equate to all this time frame that the market has been fucking wrong on the status of economy, on their forward-looking ideas about where things are going. The market has been wrong for 458 fucking days. So when you get a drop, a 2-day drop like we've seen not so long ago, that's not the end of it. Normally, I would say, look, this is it. You go fucking bullish. I'm going to show you a few more charts to show you why this may not be the time to be bullish yet. So this is October Dow Jones. Okay, you get the pattern. 1, 2, 3. Boom. Collapse. Okay, let's look at the next one. S&P. Similar pattern. 1 bounce, 2 bounce, 3 bounce. Boom, totally screwed. So look again at the timing. August, guys, I'm recording this on August, what is it, 10th, 11th today? Look at this bounce. I would dare say that we are here if we were to do like a day-by-day match of the historic analog, okay, dating to 1974. I would say that we are here if we were to translate this onto current market condition. Okay, so this is the bounce that happens, what? The week of August in 1974 from, it's your second week of August, which is exactly what we just had. So look at where the big drop begins. It's the August 12th. 1-2 days off here, right? So maybe the market was open on the 11th, so on Monday. So the drop begins again. After a week, the drop begins again right after a week is done where the market pumps. Okay, and the drop doesn't stop for how many days? Look at this. Look at the whole fucking month of August, right? And then it looks like, oh fuck, we're done. That's it. And then the market bounces, okay? Reverses on the same day, drops, bounces one more time. What is that? It is a repetition of the tornado pattern. Bounce one, bounce two, bounce three, doesn't quite come up to the highest level of the prior bounce. What happens next? Boom, another fucking drop. And another bounce, which on a longer time frame, again, now instead of just focusing on this time frame, if we're just to focus on time frame from here to here, bounce one, bounce two, bounce three, bounce four, doesn't quite come up as high as the level of this bounce. What happens next? It's fucked. So if we are here, based on the historic analog, we've got another, okay, what is this going to be? So if we're to just apply these numbers, okay, 62, 83 right here. Guys, this is about, okay, 18, 90% drop. That's, let's see how much. That's like 22, 23% from here to here. It's about 22, 23%, guys. And I may be off. If you use a calculator, I may be off by percentage, but that should equate to about 22, 23% drop. So 22, 23% drop from current levels, guys. I mean, where does that put us? Shit, let's do the math. The market roughly is at 53.50 now. Let's say 53.60. 22, 23% of that. Where is that going to put us? Okay, 20%. It's like 1,000 points. It's like 1,180 points roughly. So this will put us closer to the 4,200 range on S&P. Within what time frame? 4,200 on S&P, if we're following this historic analog, again, not without the bounces, but majority, it's going to be like a slow moving thing lower. And within each candle, look, the day opens higher and the finishes lower. Opens higher, finishes lower. Opens high, finishes lower. Opens high, finishes lower. So basically, this is a sequence of like move twos. This is each one of these candles is a variation of a move two, pretty much for the entire August, starting like August 10th, 11th on this historic analog. Until we get to the very end of August where the market says, well, we can't take this shit anymore. Let's bounce a little bit. And they do 3 attempts and they fail again until they fail on the 4th attempt. And then there's more dropping all the way from October. So we're talking about next 50 days, okay? Next 50 days of pain, total pain for the market, okay? So if you were to give this historic analog significance and apply it to current market conditions, I would say, 22, 23% is conservative. It is fucking conservative. Why? Well, because you didn't have a Japan blow up, okay, which I'm going to cover in the next video, guys, the part 3 of this message, the contagion. But I'll briefly mention basically the simple idea of it. 1997, 1998 historic analog, what was taking place in the world? Well, you have a blow up in Thailand, which was a much smaller financial market at the time when we compare it to the size of the blow up in Japan right now. But yet, out of that small blow up in Thailand, you had markets that were blowing up within weeks all over the world, such as Hong Kong, South Korea, all the Asian nations in like Malaysia in the South China area. I mean, all of them places were blowing up one after one. Now, that started with a much smaller blow up in Thailand, but it resulted in the biggest blow up in the financial history in 1998. So the contagion started in 97, but it resulted in the biggest blow up that many people don't remember. The biggest hedge fund fucking in the world, long-term capital, had to be rescued. Okay, so, and that happens within 12 months. So considering that we've got political uncertainty in elections, we've got Middle East, we've got historic analog that perfectly matches 1973-74 transition. We've got potentially on Tuesday, Wednesday, when we got the PPI and CPI reports going to be announced, a confirmation of stagflation case. considering the market is currently off the highs by only 7%. I don't think, if this is a perfect historic match, okay, that back in 1974 we had a plethora of conditions that could cause the market to break in a crazy kind of way. I don't believe we had that many conditions back in 1974, but we do now. And for that reason, I'm stating that 22-23% drop could be very, very conservative. So a level of 4,200 may be a conservative level, but let's say we go with that for now. That tells you that in the next 50 days, roughly, 50, 60 days, the market's going to drop to a level of 4,200 on S&P 500. Now, never mind, you can do similar numbers to NASDAQ and Dow Jones and so on. I mean, all this shit is going to be correlated. Those people that are telling you now it's the greatest fucking rotation, they're fucking wrong. There is not a rotation from, big tech stocks to small cap stocks. There was maybe a temporary idea of it, okay, but small caps will drop by the greatest fucking amounts, and the small cap index, Russell 2000, is still so close to the top, it makes it still a perfect short on any kind of bounce. So with that said, okay, let's review some of the charts. All right, guys, this is a chart of Bitcoin, and it's a slight variation of a tornado pattern, okay? The major difference here is there is a tornado pattern in a much shorter time frame, but we're looking to match the charts that I was just showing you to match the time frames on those. We're looking at this chart first. So you're looking at a variation. Normally, tornado pattern is highly accurate when something drops first, okay? So you could look at this as drop 1, okay, bounce 1, bounce 2, bounce 3, okay, bounce 4, and here you're heading for the collapse, okay? But as in a prior example, I've shown you how in 1974, okay, shortly after the collapse, or what appears like the end of a collapse, something bounces one more time, it makes a fifth case, and then it drops fucking again. So now, especially when you combine the context of this chart, such as what? The death cross. You got the blue line, the green line. The blue and the green are set up here to what? 20-day, 50-day, and the orange is the 200-day. So you got the 20-day moving average crossing the 200. You got 50-day moving average crossing 200 at the same time. How often does that shit happen? Okay, not very often. Okay, and you still have the ability. Most of the people will say, including myself, but hey, hold on, there's a case of potential bull divergence right here because RSI just dips just a tiny bit lower. But when Bitcoin goes from the prior low of 53.3, it drops to the 49 handle briefly that night. Okay, and since then, yeah, we could almost see a bullish case of a divergence. But this is the only bullish fucking thing on here. So I would stay with the overall context of the chart and focus that not on the fact that Bitcoin can collapse again today or tomorrow, but could it do it Tuesday, Wednesday, Thursday? I think most of the people, they totally miscalculate the fact. They think it's a safe haven. Well, recently it was proven that Bitcoin was dropping on the same day that dollar was dropping, that gold was dropping, everything was dropping. So everything drops, well, Bitcoin is going to drop too. It's not like we're having days when shit is collapsing and Bitcoin is the only thing that doesn't collapse on that day. Come on, let's get fucking real here. Bitcoin is not a safe haven. It's a great thing to own, and you should fucking own Bitcoin. And if you don't own Bitcoin at this point, you're a fucking idiot and you need to correct that. Okay, if you don't own crypto, you're a fucking idiot and you need to correct that. Okay, but let's get the correlation straight here. All right, let's get the correlation straight. This is a big fucking tornado pattern and it has not played out. It does not mean things will collapse, in the next 12 hours. They could, okay, but there is a bigger move to the downside. All right, and if we're to look at a chart of Ethereum, that shit looks even worse. So yes, we're looking at Bitcoin and the chart looks like total shit. And of course, everyone is screaming, yeah, but we're holding the 60,000 level. Look, we're not dropping. We're not dropping. Okay, great. Watch a pump to like maybe 62, 63 and a dump back to like 56 and see what all these people are going to be saying then. Because that's what this pattern is telling us. With a 90% accuracy, that's the shit that's actually going to happen. Most of the people have already, because of the, I mean, this almost qualifies as a move 13 with the exception. We still haven't closed the gap. We still haven't, I mean, once you see this V-type bounces, I mean, they're very highly dangerous to short. With exception when you have extreme market conditions and multiple bear catalysts that, you know, the contagion in Japan, we have not even seen yet the beginning of it. The bankruptcies in Japan that will be announced, or the bankruptcies that result as, you know, I mean, you're going to be hearing story after story this week, next week, 3 weeks from now, how this hedge fund blew up and this blew up and this blew up and everything fucking blown, okay, which tells you one thing, where the market is going, and the market is going into a market environment where there's going to be less liquidity, not more. Liquidity drying up is not a good fucking thing for crypto, okay? However, we got Musk and Trump speaking Monday. That cannot be bad for crypto. And for that reason, this explains why Bitcoin is still above 60K and maintaining that 60K level. But let's see what happens after the Trump-Musk interview is done Monday. I would argue there is a 90% probability that after the interview, shit is going to drop. So let's take a look at the next chart. Okay, so Ethereum chart looks like 100 times worse than Bitcoin chart, okay? So the only bullish thing it's got is this potential crossover on MACD. And for that reason, there is a possibility that first Ethereum can bounce back to this level of 2,800 all the way to this green line. Precisely would be 2867. But of course, it doesn't have to be precise. Like it could bounce to 2825, 2850, which would be a level of now resistance to the upside, which used to be a level of support. Clearly you can see 1, 2, 3, 4, 5, 6, 7 instances where it gets to that level, and that's the level from which it bounces. So despite of the bullish momentum for the last 5 days, right, all the crypto bounces, Bitcoin bounces above a very important level of 60,000 and just stays there. This thing is still in the doghouse. But similar pattern, right? What we have is a bear crossover. So this does not have to necessarily resolve in a upside momentum on MACD. It could actually stay lower and go lower. It can reverse to the downside. Actually, this is something we discussed in multiple videos earlier in July before the collapse, pointing to the fact that things don't have to cross necessarily. In the majority of the instances they do, but sometimes they come close and they resolve to the downside even further. And I believe that's what's going to be the case here with Ethereum. Important to understand, when you take the Crypto Star course with 13 Market Moves, guys, we describe this sequence of events precisely to help you understand whether you're looking at the right pattern or not. Basically, normally MACD would cross to the downside first, and if that happens before the def cross occurs here, so basically we already had the 20-day moving line cross the 200, we now also in a situation on Ethereum where the 50-day has crossed the orange line. So now we got double cross, double def cross. I mean, that don't even sound, double def. I mean, you can talk about a def cross, but damn it, double def cross? How many times can Ethereum die? Shit. So you got this bounce, but you got a major divergence. You got strong sell volume, right? What volume is the bounce happening on? And at the level of 2640, is anyone even buying? No, nobody's buying, which because probably a lot of people are waiting for the economic data on Tuesday, Wednesday, Thursday before they're going to make up their mind if they're going to push this thing higher or not. You know, a stance on the economic data, of course, they can flake the numbers as many times they've been able to. But again, there comes a moment at which they cannot masquerade and present the numbers in this artificial form. So if we're at that point, the numbers are going to deteriorate. we all know the numbers have been deteriorated for a while. And so the only outcome of that would be the resolution to further downside on Ethereum, not to the upside. Let's glance at the next chart of great importance. So most of you already don't remember it because it was in March 2023, February 2023, okay, that led up to this. Basically, the macro picture of what resulted in this was such that M2, the money supply, had a negative reading month over month, quarter over quarter. And this is what caused a lot of regional banks to basically get fucked, combining with the higher rates. So look at this chart. So it looks like a collapse, just like in Japan, right? Even greater numbers here. And it looks like, okay, the worst is over, and it bounces from sub 20 to above 50, okay? And then look what happens again. When everybody says, no, the worst is over, everything is good, it collapses one more time to 20 now. So potentially in Japan, we're looking for similar reversal, similar formation. So the level where Japan is trading now could equate to this sort of bounce and level, after which it goes down one more time, pretty close to the level where it was. The low in Japan was at 30,700 if you were paying attention to the futures. So we're talking a potential drop in Japan of 4,000 or 5,000 points. If Japan does that over the course of this trading week, then you can have a similar move in S&P, NASDAQ, and basically RTY, I think, is going to get hurt the most at this point. So let's not forget that the causation of this situation was the concern about liquidity drawing up and the data actually confirming that AM2 money supply was turning negative. This blow up in Japan is going to cause the same thing, okay? The liquidity is going to be a concern, as you're going to see many businesses around the world basically saying, hey, we couldn't fucking take that day and we blew up. Okay, many companies you're going to hear are going to be filing for bankruptcies. Normally when that happens, guess what? Those are not good credit conditions. So good luck going getting a fucking loan at that moment where there's going to be many businesses failing and filing for bankruptcies, okay? Banks are going to be so conservative with loans, okay, that it's going to be impossible to get a fucking loan. So within those conditions, okay, I can tell you two certain things, okay? Markets do not do well. Crypto does not do well. Crypto normally does well with easy money. And there's this whole misconception that, if everything drops, if dollar drops, man, crypto goes higher. No, not like short term. Short term, everything drops. Longer term, crypto is a winner. But short term, absolutely fucking not. So you don't want to miss one of the greatest situations from a short selling perspective based off what everything we just reviewed, guys. So I invite you to trade these moves with a 30 market moves coach. Okay. Now we deal with probability. So to us, it's a highly elevated probability that the market is going to make another leg lower from where it's at based off what everyone else is saying. They expect in the continuation, the closure of the gap up, the closure of the gap down right here. There is a possibility of that, but looking from the probabilities, I would not take that probability, okay? And if by a miracle of bulls, something like that does take, I will bet you, I will put a huge fucking position at these levels because that would be absolutely the most beautiful, magnificent entry on shorts ever. But sometimes when you're going to wait for something like that to happen, you're going to miss on something that could already be happening, okay? And again, you don't want to be shorting stuff here. Like right now, it's a beautiful bounce. And the repetition of the death cross is unanimous on any. You can pull up 178 charts right fucking now, and you're going to see this death cross on every chart, okay? You're going to see this bear divergence. Basically, when the bounce is happening, the volume of the bounce, look, it drops off every day. There's less and less people wanting to buy things at this level. So where do you think the highest probability of the next move is? If there is no buyers at this level, what happens next? All you need is just a few sellers. So let's say you were buying here, and now you're here and you can take profits, and you notice, well, the market is slowing down. There's no more buyers. Okay, do you buy more? No, you start fucking selling. And that's what propels the selling, especially if, you maybe, you might have reviewed the last couple of video guys where I'm talking about the stagflation. I mean, it is the stagflation case if it confirmed by data on Tuesday PPI, Wednesday CPI, Thursday jobless claim numbers, retail numbers. If these numbers are not what the market is hoping for, it wouldn't be a shocker that first we drop to this level. I would say we're going to break. We have a probability of breaking this 5,032. I say we go straight down to 49.50, okay? And this is reality. I mean, what can take place this week from August 12th through, August 16th, I guess. And then going into next 2 weeks, because I've shown you in the 1974 historic analog, right? Just because we drop potentially for next 5 days, it doesn't mean that's where the drop is over, right? It doesn't mean like you wake up and automatically the futures in the green, the futures are in the red, the market is in the red. I've shown you in the 74 historic analog that almost every day the market attempts to bounce, but then it drops. It attempts to bounce. So there's going to be days you're going to be looking at the market in the morning, it's going to be green, and then by lunchtime it's going to be red, and by 3 p.m. it's going to be really, really fucking red, and then by 4 p.m. maybe you get a slight bounce at the end of the day. So that's going to be the predominant structure of the market. And so if you understand how to trade that, you can put multiple trades together, because at that point the market just becomes very, very readable. You have high probability accuracy of going and trading every day. The type of structure of the market that to us at 13 Market Moves we know is a move to formation. So if you're not familiar with the move to formation, guys, you got to be reviewing the 13 Market Moves course right now. If you don't own a 13 Market Moves course yet, you should not be trading without it. You can acquire one by going to 13mmtv.com. Okay, huge discount if you're paying with crypto, guys. So make sure you get it done. Review it before the market opens up at 6 p.m. tonight, Sunday, before the futures are running, guys. So with that said, this is not a bullish setup, okay? Is there possibility of a slight bounce? Yes. But overall, what is the bigger move here? What is the bigger picture here? Based on the historic analog, based on the contagion that we are yet to hear about, multiple companies going belly up, based off drying up of the liquidity that will be, colossal, based off the stagflation, which could be confirmed Tuesday, Wednesday, Thursday. I think there is a 90% probability that the market will fucking drop. So if you want to identify the best trades, because just knowing the overall information and historic analog is not what's going to put money in your trading account. It's going after certain entries and certain exits that will. And please don't be the fucking guy, okay, that's like, oh, Leo, but I bought calls this week and I made some money. Okay, you're going to stay being bullish. All the money you've made this week is going to be fucked. Focus on the bigger move. The bigger move, okay, in this type of market conditions, look, you got to be total fucking idiot. Look, from here to here, okay, the market practically uninterrupted, 458 days higher, okay? And who is leading this? You know, every day, who do they have on CNBC? This guy, Tom Lee. Tom Lee is the biggest fucking bull. And let me tell you some stories about Tom Lee. This guy never goes bearish, never in his lifetime. I remember watching an interview with him in December 2017, right? Bitcoin is at 20,000. He's like, yeah, man, it's going to hit 100K soon. Right? And this shit, at the moment, I was recording the video how Bitcoin was going to drop from 20,000 to 3,000 in the following 12 months. So Bitcoin ended up within 12 months to like a level of 3,400. And that's when we started buying Bitcoin again. But the point is, okay, he stayed bearish. He stayed bullish throughout fucking 20,000 to 3,500. Okay, which that is too big of a spread. And you know, the funniest thing is, I was listening to Sailor it randomly came up on like my computer Sailor interview, and he was bragging about how he is so awesome about buying the tops in Bitcoin because it can only fucking go higher. You know, that is the stupidest shit. The guy's putting billions and billions of dollars in Bitcoin. Do you think some of you people can fucking give him one of our courses so he can time his entries a little bit better? Jesus. Fucking Sailor needs to be taking the Crypto Star course about the entries and exits and the tornado pattern. This guy, every time fucking Bitcoin pumps, he fucking buys it. The guy, I don't see this guy ever buying Bitcoin on a fucking dip. And that may have to do with, you know, the way he's taking all these loans out. Maybe they're not giving him the loans when Bitcoin is dropping. Maybe they're only giving him loans when Bitcoin price is improving. But Jesus, he would have had 3 times more Bitcoin now if he would have taken our fucking course. Okay? So don't buy the top. Okay? And in this particular moment, this looks like a pretty well-defined top, give or take maybe 50, 100 points here before the next big move lower is going to take place. So don't be buying the fucking tops. Okay, short them. Short the fucking bounce. Learn how to short a bounce with the 30 Market Moves Coach, guys. This is going to be a huge week. Don't fucking miss it. Got some killer trades for you in the areas you've never even heard of. We're going to be trading some ticker symbols this week. You're going to be like, fuck, I've never heard of this thing. So don't miss the hidden gems. Sign up at 13mm TV. Schedule a call. Talk to a coach here right now. Get yourself set up for trading next 60 days. Could be fucking huge. And then we're going to nail the bottom and we're going to have a round trip trade. So next 120 days, we trade next 60 on the downside. The following, and when the market completely just fucking gets to the point to where people are puking and jumping off buildings, that's going to be the moment where we're going to be going bullish. And don't miss that big buying day when we're going to be fucking turning to bulls. It's coming. So roughly 60 days on the bear, 60 days after that on the bull. You guys can make, wherever you are, if you got 5, 10K account, make it a challenge for yourself to go from 5, 10K to 2 million plus trading with a 30 Market Moves Coach over the course of next 120 days. Let's fucking roll.